How's it going out there? It's July 7th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I hope all of you had a wonderful holiday weekend with the family. Spent time with my daughters, lighting fireworks on the beach. Had a great time. Also spent Friday to Saturday with my wife. So I told you guys last week, I was supposed to go to the Motley Crue concert, which also featured Def Leppard, Poison. Really, really cool. Looking forward to it. And then Wednesday came along and I started looking at the dates. And I found out that the tickets I bought were for next year, 2022. And I have to tell you, I'm pretty thorough with this, but be very careful because now that my wife posted on Facebook and we're hearing the same story from so many different people about how crazy it is. But when you post or you pull up even Ticketmaster or whatever, you go in StubHub and tickets to the concert for, say, July and August, they have all the concerts listed as it's this year. And then when you click it, apparently some of those are for next year. And even when you check out, my wife and I, there's a lot of people I went through. Anyway, maybe I could have looked a little bit harder. I was just assuming that it was on Friday. So it's 2022, which left a big gap because it's hard to follow that up when you have an excitement of going to a live concert. It's going to be fun. So, what we going to do? How to make it up to her. And we got a babysitter and spent the day in St. Augustine. And we go there maybe once, twice a year. Went to a few bars. Got a foot massage. It's awesome. Reflexology. It's really cool. Bought some cool things. You got time to go to the outlets, which actually pissed me off. Now, what I'm about to say could get this podcast kicked off iTunes. So if that happens, just to let you know out there, you can find this podcast on our CurzioResearch.com site, if you own, or Curzio Research YouTube page, which hopefully doesn't get kicked off there too. Because we film, as you know, Wall Street Unplugged every single week in video format, which is awesome. Getting tons of page views, tons of subscribers. Anyway, just in case you get kicked off, you have options. Because something pissed me off going to the outlets. And going to say what so many people want to, but can't. This gay shit is getting out of control. Full disclaimer, I'm not gay. I have friends who are gay. I believe in equal rights. No problem with gay people at all. You have to say this disclaimer before you say anything about anything and talk about anything. But nearly every single store at the outlets had rainbow clothing, rainbow products, sneakers, rainbows on them, shirts, gadgets, iPhone covers. I mean, they were displayed everywhere, in front of every store. And this is like 20-25% of the inventory of these stores had some kind of gay association. And this was Friday, July 2nd, right? Gay Pride Month was June. Gay Pride Month. I mean, gays get an entire month to recognize the LGBT community and the impact they've had in the world, right? That's the stand definition on Wiki, if you want to look at it. But a whole month they get, right? Let's put this in perspective. I mean, George Washington defeated the British, helped win the Revolutionary War, created this wonderful country, had the opportunity to be king after winning, right? Have absolute power, become a dictator, everyone wanted to do. And instead decided to help draft the Constitution, create a democratic system of government, which we all live by today. This guy gets 1 day. 1 day. Abraham Lincoln freed the slaves, won the Civil War. Imagine the North lost that war. I mean, holy cow, where would we be today if that happened? And the fact that if they're winning, Abraham Lincoln, he put his ego aside and said, hey, we're not fighting anymore. We're going to help rebuild the South. So we have unity, Americans again. He gets 1 day. Martin Luther King, one of the most important activists ever, leader of the civil rights movement, despite all the prejudice, hardships done to black people over that time period. His message, only through nonviolence is reconciliation. Amazing person, he gets 1 day. I mean, I keep going. You got Neil Armstrong, Amelia Earhart, Walt Disney, Alexander Graham Bell. That guy was pretty important, right? He's pretty important. They don't even have a day. They don't have a day. The gay community, they have an entire month. And then on top of that, you throw in the media and the corporations promoting the hell out of this. And they're promoting to intentionally draw as much attention as they can to themselves, showing how great they are and, checking off all the boxes to the point where, even gay people are like, all right, enough already. Enough. And then we have transgenders. I hope that's a proper term. I think it changed every 6 months. And again, I have no problem with transgenders. I believe everyone should be themselves no matter what. I've said that numerous times on this podcast. That's what having good character is all about. I say that how many podcasts do I mention character, how important it is to me? It's there's so many fake people in this world, which I hate. If you're an asshole, be an asshole. If whatever, just be yourself, right? It's important. But transgenders right now, they could basically crack someone in the back of the head with a baseball bat in front of the mayor and police commissioner, and they won't go to jail. Seriously, they're more powerful than the president right now. I have no problem with what bathroom you use. Just was next to me in the urinal, I would probably say, hey, how you doing, and what's up, or whatever, and going into the women's bathroom. Some people have a problem with that. I don't know if there's ever been a case of aggression or rape for transgenders or anything, or a recorded case. Maybe there has been, or whatever. But I had no problem with that. But I do have a problem with letting them compete at the Olympics. And no one's allowed to speak out about this on social media, or you're gone. Few people can. And forget about supporting all of our women and their rights. How they have to compete essentially against men. But you can't even talk about this from a woman's perspective. The Me Too movement, women's, forget about it. They're trumped. They're trumped by Black Lives Matter. Then you have environmentalists and the LGBTQ community. They're at the top when it comes to the power of organizations. So even if you're defending women, you're going to get in trouble because there's a higher group, a more powerful group there. But standing up for women all over the world for the Olympics, sorry, not allowed. Not allowed when it means talking against a more powerful group than you. But holy cow, how are we allowed? How is that allowed? Has anyone allowed this? And again, I just love how the corporations, big institutions who, have racist backgrounds and settled so many lawsuits for decades. You can go into pretty much most Fortune 500 companies, not giving all the employees equal opportunities. Now, what do? They go full overboard. Opposite end of the spectrum. A good example is the Academy Awards. Look what they did in 2015. Not one black person was even nominated. Forget winning. Not even nominated for any category. And that followed 2014. The same thing happened. But 2015... people got pissed because 2015, there was a lot of good movies that year. Will Smith for Concussion, Michael B. Jordan for Creed. Straight Outta Compton was fantastic. And the following year, what do? After the Academy got called out on this, they nominate blacks everywhere, right? 6 black actors nominated, 5 won. Moonlight won Best Picture, first all-black cast movie to win the award. I know you probably never heard of it, and not too many people saw it, even today. But it beat out La La Land. If you remember, even Warren Beatty, Faye Dunaway, they couldn't believe the Academy would do this either. They announced on stage that La La Land won the Best Picture when they were presented that final award. And then a producer ran up on stage, and this is like a good 2 minutes of them celebrating, saying, no. Moonlight won. It's not a mistake. This is not a joke. And whatever, the wrong card was handed to them, whatever. But what a debacle that was. But Moonlight? How many people know that Moonlight was a movie of the year in 2015? Or the Academy Awards, which were 2016 for 2015 movies. Nobody guessed that. But for every mistake that's made, especially public, there's always a huge overcorrection. We've seen the markets. Dodd-Frank banking regulation, 2008. More regulation, we got to go. And they went all the way to the extreme, to the point where, what was the point of this regulation? So they're not too big to fail? They're 5 to 7x bigger, the biggest banks in the world, than they were back then because of the rules you put in place. And you dial a little bit back, but come on. I covered that the other day. The most powerful industry by far. These guys are huge. There's no competition. You can't go from a mid-cap to a large cap in the banking industry. It's going to get bigger and bigger and bigger. They're always going to be too big to fail and get bailed out. Perfect environment for those guys. Holy cow. Money being thrown into the system, everything. What about COVID? Closing all the schools in COVID. Zero evidence that it impacts children. And when it comes to racism, bigotry, gay rights, if someone says the wrong thing publicly, what happens? Public apologies. You have to march in every LGBTQ parade and kiss ass for the rest of your life. I mean, I'm a big fan of Rachel Nichols. By far the best NBA reporter. She's doing it for what? Over 20 years. Does the finals every year, and she got pissed that somebody took her place who is a good reporter, definitely less qualified. And she expressed it. It wasn't like she NBA, she's not racist. A lot of NBA players came out against her, but she said, hey, I think ESPN is just pushing this movement where why would they give her that spot? And she got caught on tape saying that. So what did she do? She came out and immediately apologized. That's not what I meant. ESPN didn't care. They're the most political organization in the world. And they banned her. They suspended her. Even though she apologized. I mean, it's crazy out there. But for me, look, that's why it's cool to be boss, to be independent. I can say exactly how I feel, which should be the case, right? This is America. I mean, it's liberating. Not being subject to a company's agenda simply because you work there. And I have to tell you, it wasn't always like that. I was in those shoes earlier in my career. And you had to be careful with the things you said at the companies I'm at. Wasn't so much political, but just, you had to support certain things and you can't really speak out against it. No way. Good luck. You're gone. Anyway, I have tons of respect for gays. I have tons of respect for transgenders. Just LGBTQ community. I love people who are not fake. Just be yourself, be honest, and you'll always be able to look at yourself in the mirror. That's the best advice I can give, because growing up you always want to be somebody else, and you realize, hey, this is me. I mean, I tried to change my accent a little bit from New York because I was told that, you want to succeed in business, you got to get rid of that accent, and it's too heavy and whatever. And then I realized, doing the podcast for 14 years, I said, you know what, F that. This is me. Yes, I'm not going to fully pronounce words, and I'm going to say ax instead of ask and stuff like that. That's me. You don't like it, tune into another podcast. That's fine. But I'm being true to myself. With that said, enough of the gay pride shit. I mean, 30 days is insane, and now it's going into July. It's past 30 days. Again, even gay people enough already. I mean, it's totally overboard, throwing it out there, and it just, it's great. Celebrate it. It's awesome. Again, but 30 days, and then you're going past it and just thrown in your face intentionally. I mean, it almost defeats the purpose, right? Because, you're probably going to piss people off the more you're continually throwing shit in people's face all the time. And I don't know, maybe that is the purpose. Maybe that is the political agenda, piss more people off or whatever. But man, come on. I mean, we know equal rights, treat everybody the same. We get it. 30 days, that's great. Now it's extending into July and stuff like that. Anyway, sorry about the rant. I had to go there. I know this is an investment podcast. I'm just telling you how I feel and go different places, my family and stuff like that. But man, even when I talk about this in different circles, people say the same thing, but you can't really say it out loud. For me, I want to say it out loud. I want to be honest. I'm honest. I'm always honest. Maybe I'm too honest. That just gets me in trouble. Anyway, let's move on to, I guess, more important things, which is our guest. And it's a first-timer. And if you watch me on Benzinga, it's Benzinga's Power Hour. It's every Thursday at 12 o'clock. Been on for the past few weeks. I'm going to be on for the next 8 weeks. So Power Hour is a live show that they do on YouTube where you share stock ideas. And it's hosted by Luke Jacobi, who's the director of operations for Benzinga for 8 years. You'll be surprised when you hear that. I mean, that's how long he's been there. Because when you see him, he looks young. He's been around the markets close to 10 years, doing a fantastic job. He interviews me all the time. And I tell him, hey, I have this podcast. I had everybody on. He's like, oh, well, you didn't have me on. And which is really cool. And he was just poking fun at it. But he's really good. Again, been around markets for a long time. He's an amazing host that's interviewed some of the top people in our industry. Also a smart analyst with access to great ideas. And that's what this podcast is going to be about. Because when I'm on his podcast, I'm sharing ideas. He's coming on this podcast, sharing his ideas. So get your pen and paper ready. Again, he interviews, has great content, deep network, great host. He's a superstar on making the industry. And let's get to my interview with my buddy Luke right now. Luke, thanks so much for joining us on Wall Street Unplugged.
Absolutely. Thank you for having me. Happy to be here.
So exciting times for you. Working at Benzinga. You've been there for 9 years. You are now director of operations, and also you host Power Hour, which I've been on the past few weeks. I'm going to be on the next, I think, 7 or 8 weeks. And now it's nice to get you on the other side of the microphone. But talk about that journey, because you've been there for such a long time and see it develop and everything. Director of operations. That's really cool, man.
Yeah. So it's been quite a wild ride. The business has adapted significantly over the past 9 years. The way that I got here is by happenstance. I saw that Benzinga was based out of Michigan, which is where I grew up. Have been a stock market junkie for quite a while. I think I opened my first brokerage account when I was 15 years old, and my dad had to walk me into a Scottrade branch and fill out all the papers in his name, as I wasn't even old enough. I saved up, lawn mowing money, whatever the account minimum was then, $2,500 or something like that. But I've been a stock market junkie for quite a while. Saw that Benzinga was in the same area, just reached out to say hi. And basically got a message back from Jason, the founder of the company, saying, "Hey, we need more people to write articles. Do you want to work here for free?" And I said, "Well, that sounds awesome. I get to just write about stocks and people will read it. All right, I'm down to do that. Right, write up my stock ideas, my pitches, learn how to cover news, that sort of thing." So that's how the journey began. And I mean, today we are the most widely used news source for North American brokerages. So pretty much every major brokerage in North America carries Benzinga content, makes it available to their users. We get 20 million of people a month to Benzinga.com proper, to our site. We've built a ton of subscription products over the years, like our Benzinga Pro. So, and it's definitely been a hell of a journey over those 9 years.
No, that's awesome. And Jason, I worked with at thestreet.com, and we both had a lot of respect for each other. I just had him on a podcast a couple months ago. Just a great guy, and just to see, what he's done with this company is incredible. And that's one of the things I want to talk to you about, because the Wall Street Bets thing, right? Everybody knows about it now. I think it's over 10 million strong now. But a lot of that started right on your website with Citron. Go into that a little bit, because, and also, are you surprised at how many young investors are coming into the market and coming into this platform? Because even when I'm on your platform, it's really cool. You do a great job hosting it, but it seems like just the way it's set up, and I could see so many young investors. It's just simple to use. People understand. You're shouting out lots of ideas. You're making it exciting. You're talented people who are really, really excited. And that growth's amazing. But just, I guess we could talk about that. It's awesome.
Yeah, so the GameStop and Citron moment was one of those, oh shit, like we made it type moments. In that, when Citron was coming out with its short thesis and sort of doing that first talk about why it's shorting GameStop, Benzinga was a platform that they said, "Hey, I'll come on and make this short case." They'd published some materials before, but I think it was the first time that Andrew Left was coming on video saying, "I'll make this short case to the individual investor via Benzinga." And the reason why that was like a we made it type moment is because he looks at Benzinga as this is the mechanism to get in touch with the retail investor. It's not through a CNBC, it's not through a Yahoo Finance. It's Benzinga is the platform to do it. So I mean that was a really neat moment, but it's a culmination of what we've been building towards. Our mission has always been about, we want to make financial information easier to consume. We want to strip out jargon. We're not going to make our readers read a 4,000 word story just to find out that Tesla announced a buyback, right? We want to get them to the point. We want to make things actionable. We've always written for mobile first. We've always tried to simplify, but let users get in and out. And so we're proud to say that our readership is younger than, or skews younger than any other financial media site out there. And that more than 70% of our readers on Benzinga.com are age 44 and below. More than 70%. Almost every other financial media website out there, you're going to see the exact opposite, where 70, 80, 90% of their visitors are age 45 and above. which makes sense because that's historically when people have gotten more involved in the market. They've taken more care about their finances as they're getting closer to retirement. But I mean, the paradigm shift has been happening for many years. COVID, sort of lit the fire of what was already going on and showing people, hey, markets are way more accessible than you think. And we've been there for the individual investor for that whole journey.
And just to show why that was a revolutionary moment, I mean, Andrew left. I met him several times, know him. He spoke at some of the conferences at a previous company I was at. And a great short seller, right? I think we all agree with that. And he came on the platform.
Yes.
I think was it GameStop? Great. Was it GameStop that he? So it was GameStop.
Yeah,
saying,
it was
hey,
GameStop.
I'm going to explain to everybody why I'm shorting this. Of course, he has that massive short position before and comes on all the platforms. But that's when a lot of people, WallStreetBets, kind of like took the other side and blew it out of the water. I think just said that it resulted in your systems going down. I think he said. I'm not too sure if that's factual or not, but and also resulted in Citron 20 years of doing short research of not doing that anymore, saying we can't do this anymore. I mean, it's just when you have a market and a group like that could really trigger short sells. I mean, that's a revolutionary change, right? That's like a fundamental change in the markets. When you talk about one of the best at what he does is changing his business model because what's going on and starting your platform, and that's pretty amazing stuff, man. It's pretty cool.
Yeah, absolutely. I mean, yes, he's definitely well respected. Icon of Wall Street, and again, the fact that he looks us as, hey, this is a vehicle that I have to make my case about something. It was pretty neat for us.
So I can tell you, I've been hosting a podcast, believe it or not, 14 years. Holy cow, that's how old I am. Very, very old. Okay. But everyone kind of has a podcast and stuff like that. But people always ask me, what's the value in it? And it allowed me to create this amazing company, right? Where we have tons of subscribers now, generating millions in revenue. But the most important aspect is I never saw it free for me because I am interviewing brilliant people all the time. And I see the list of guests that you're interviewing. How do you take that in? Because, these are people that are brilliant and they're sharing their ideas with you. Now you're building your network. How important is that? Because for people out there who do want to start their own podcast or start their own show, you might not make money off the podcast right away. You got to find ways to do it. But the value of that is incredible in terms of the investment ideas and the access and the network, right?
Yeah. The network is huge. Like the way that I think about it is I care a lot about what I have to say. More than anybody else. I care more than anybody else about what I have to say. Our viewers don't care a ton. Right? They care about a lot of the names that they're already familiar with. They care about the ideas that they're already familiar with and want to dig deeper into those names. So building out the network, being able to grab hold of audiences that the people that we're interviewing already have, goes a really long way. And a mistake that I made early into getting started with our show, but it was that I was too laissez-faire going into a lot of these conversations. In that, it'd be, let's say we're interviewing Andrew Left. Okay, we know he's got a short position on this, a short position on that. Boom, that's enough to get into the interview. But the audience that he's going to bring in to listen to that segment already know the basic stuff about him. They want to dig into to that level too, right? What hasn't he already publicly talked about? What hasn't he already tweeted about in the past 48 hours? Dig for sort of the meaning behind the statement. And so that's the other big takeaway that I've had is, when you bring the people on, they're carrying an audience that already has that general idea as to what they're talking about. It's my job to try to be smart enough to dig into, what are they really getting at here? What is the message that we need to uncover, et cetera.
And that's the job, right? Because for me with the podcast, it's I do a ton of research on every guest, right? I go to LinkedIn, I look at what they said the last 6 months, I look at their interviews. I don't want to ask the same shit all the time to them where, that they've answered numerous times. So, and I'll come up with stuff and I try to find something outside the scope of investing that, maybe they make their own tequila or something and that, lights them up at the end of the interview. But it just shows like they have character. It's not just like a robot talking, but just the amount of work that goes in to prepare for every interview is huge. And one of the other things I learned from interviewing people so long is listening, right? So sometimes talking is bad, right? So a lot of times when I see it on financial media channels, on TV is, these guys are asking, and they have a list of questions, like 10 different questions. And for me, when I ask a question, if something goes like in a direction I think is very, very cool, I want to learn more about, the script is over. I'll have a couple of questions I want to ask where, I see people ask a question and you'll see them just looking, not listening to their guests. And I'm like, man, listen to these people, let them talk. Because when you're going to learn a lot, and it's going to lead to a great conversation where we might touch up on something like now, right? We're supposed to go over ideas and stuff. And now, I find this fascinating, just learning of, how you built your personal brand on Benzinga and young investors like Andrew left, and going there. It's the interview just takes a turn depending on where we're going with it by listening. But it really is cool, man. I hope you continue to do it. You're doing a great job. Now, enough of being nice, because every time I'm on your show, you put my feet to the fire. Ideas.
Oh, I do.
So I'm going to do the same for you. I gave you, I think, 3. Hopefully you can give us 3, if not 2, whatever you can give us. But what are some of the things that you're looking at? And like I say, I know you're a stock junkie. I know you do a lot of research and homework and stuff like that. So I'm looking forward to hearing some of these picks, man.
All right, so let's dive into them. I'm going to pull out the notepad. I've got a handful that I think that we can get into. All right, let's start with ticker PRTS, carparts.com. It's one that I've talked about quite a bit. Background on the business is basically they are the online car part reseller. Okay, so if you're thinking, you need a new headlamp or, whatever piece of your vehicle that you need, carparts.com has, all the inventory to be able to provide that. Couple reasons why I think this stock is interesting. On the story side of things, only 3% of car parts are sold online. Right, we're in a market where 97% are still sold retail via service. It makes sense that a lot of it is folks take their cars in somewhere to get service, and they're buying the parts from whoever's doing that service. But again, you still have a ton of individuals who are going to an O'Reilly's and 2 places like that, purchasing in store. So much so that only 3% is purchased online. So I think that the industry is good. The other thing that we have going for us is that new vehicle inventories are at all-time lows. New car prices are high. People are going to hold on to used cars long. They're going to need more parts, right? It's again speaking towards the industry. The industry is good. The reason why I like this stock in particular is that the market doesn't like it. It's one of those stocks that truly is an internet e-com play, but doesn't get treated like one. Like if we look at a price to sales ratio on this stock, it's I believe 1.6. So stock's trading at literally 1.6 times price to sales. Let's say the S&P 500 average is 4, and then annual revenue growth for carparts.com is 90%. Right, they guided for something like 70% year-over-year revenue growth. They blew it out of the water. They hit 90. The market still is only treating the stock with a 1.6 times price to sales ratio. They have cash on the balance sheet, so we don't have any sort of offering risk. They're building distribution centers. They're launching marketing campaigns. And so I think that the industry is right. I think the company is right. I think the valuation is right. So there's my first one, carparts.com, PRTS.
It's interesting. They have.
What do you think of that one?
Covering it. Yeah, four. I hate. I'm shorting it. No, I'm kidding. There's 4. There's 4 analysts that cover it here. You got target price $24.25. Which is much higher than $18. So, yeah. I mean, they all have buy ratings on the stock, but it makes sense to me because when I look, you say 3% is online, but I'm surprised it's not more because yes, people go to and they'll see. They're bringing their car, but there's a lot of companies that make brake pads. A lot of companies that make a lot of different things. You can go in and sometimes they don't have that, or you could price and what you're getting, right? So you go in there and you're like, all right, maybe I want to buy something else and go on the internet. It's going to be cheaper, right? So I'm surprised that it's only 3%. Yep. That's an amazing number. It just shows how much growth is there. I like it. I like that idea. I think that there's huge growth there. I'm very familiar, dude, with the car cycle. I feel like I know a ton about it. I know why the autos, they have a different supply chain system, which is real to the market. And They were late to the party where everyone else saw the supply chains, getting really messed up and delayed, and they took up all the capacity where, Taiwan Semi, Samsung pretty much make all the semiconductors for everything. And the orders were like, wait a minute, we're seeing demand. They're like, sorry, we're already at 100% capacity. And now they have to build new facilities. So if you go in to buy a new car right now to your specs, I'm talking just your color and a regular model, it's 9 months before you get it. So, that's why you're seeing
crazy, right? I mean, it's insane.
Yeah, it is insane. So, yeah, I love this pick, man. That's pretty cool. All right, let's keep rolling. Go ahead.
All right, shall we keep it on autos? I am in Detroit, Michigan. Maybe a little bit of a bias. All right, but I'm going to throw one out that I've been in for quite a while, actually. But since January, I'm still in it, and I'm selling calls against the long position to lower the cost basis. But it's going to be Ford Motor, ticker F. I think that there's a little bit of a fundamental story to be made for Ford in that the stock is still relatively cheap. It's had a really nice run, but it's still relatively cheap. If we look at an EV to EBITDA ratio, I think price to sales is really hard for the autos because they have their financing arms. But if we look at like an EV to EBITDA ratio, the stock's still only trading at 8. That's significantly lower than if we want to take an S&P 500 average. And then if we want to look at automakers in particular, whether we want to look at our Teslas, it looks really cheap. But if we want to look at our more traditional automakers, which are a better comp, like a Toyota and a General Motors, valuation still has a little bit of room to come up. The reason why I think this one is still interesting at this point is Ford has proved to us this year that they are a PR machine. We see what I call the EV energy flowing into stocks, right? When we were seeing NIO rip and Tesla rip and all these EV stocks just start going, Ford came out and said to the market, hey guys, we're about to spend a ton of money on advertising an EV platform that we're rolling out. They absolutely haven't disappointed this year. They've been a PR machine talking about vehicles they're launching a year from now, 2 years from now, 3 years from now. They are going to have products coming online in Q3. So we're going to have new EV products on the marketplace for them. And when those hit, I'm expecting Ford to drop a ton of money on marketing and advertising for their EV products. So again, I said I'm selling calls against the stock. If you look at the chart, it's definitely not beautiful. So I have an underlying long position in the stock. I've been selling calls against it for like the past 2 months and just, working that cost basis down 15 cents a week, basically, which doesn't sound like a ton, but it adds up. I maybe lowered my cost basis from an 8 to a 7 over the past 2 months. But again, I like it for a longer term swing trade. I want to see them get that EV marketing machine, PR machine rolling, which they've already showed us they can do. And let's see if that can drive some more energy back into the stock.
Yeah, so Ford I'm very familiar with, and I the EV portfolio, I guess, is surprising to some, but going to Consumer Electronics Show, I always do boots on the ground research. I like going to conferences. I've been going there for like 10 years. The last 5 years,
awesome.
Ford has spent billions getting into this industry and just displaying their cars, displaying technology, being able to talk to the people on the floor, real employees, not the CEOs always going to tell you how great his company is. But it was amazing to see, them getting into this. Now, with that said, for me being in the market for a car and looking at Ford and GM, I just feel like the production, if you can get past these next 2 quarters, it's going to be fine. But like you said, they are a PR machine because they are talking their EV portfolio like crazy, which won't be available until 2030, which is a very long time away, but they're talking how great it is. And I get it and it's fine, but
yes.
You're going to see massive production cuts here. That's the only thing that worries me over the next 2 quarters, but you holding it long term. I like what you're doing in terms of the option strategy, lowering your cost basis. But that's the only thing that worries me because I think they just reported really bad numbers. I think they're going to report because they're not getting any production. They're idling plants. So if they could go through this and people don't care, this thing's going to go to 20. So it's going to be interesting to see. But
here's my one piece of solace.
Mm-hmm.
I was just going to say my one piece of solace with this one is that the company did guide that Q2 is going to be the worst part of the year. They said the Q2 is going to suck. They told us that in Q1 it sucked. Mm-hmm. and they said, that's the trough. I mean, hopefully they had enough foresight to be able to foresee what the rest of the year is going to look like. That I think that's yet to be determined, but that's the little bit of solace that I have.
And the cars that they're getting, which are very few on a lot, are selling above sticker. I had to pay above sticker, no incentives. And if I didn't pay for that, the guy behind me was buying it. I'm not kidding you. There was 3 that went on a lot.
Okay.
It was at Denali's. And 3 of them came in. I got lucky and I had to buy it to that spec. And they were like, let me know which one you want because the other 2 are gone. We got 3 people. And there was like 5 people there and everyone, you need a car, right? If your lease is up and there's hardly any cars to buy because everyone's having supply issues. But they said that there's usually 350 new cars on one of the lots and there was 20. And that was common for a lot of these things. So once this thing reverses these, and so Ford might make up the difference in terms of, being able to charge numerous, huge prices, much higher prices, but it'll be interesting to see. They got to get those cars in the shops and get that production going. But yeah, I mean, right now, listen, it's held up surprisingly through that quarter, which I thought was weak. But if they hold up through here, I think, this thing could really, really start going for you. So real quick, let's get, do you have one more or are you done there? And if you're done, it's perfectly fine, but I'm going to try to squeeze one more out of you.
No, we'll hit one more. We'll go with more of a spec play. How's that? I'm going to throw this one out. Another one I've talked about a ton, Voyager Digital. Primary listing is in Canada with ticker VYGR, also OTC listed, ticker VYGVF on OTC markets. In short for this one, don't want to take up too long, but the in short for this one is that it's a crypto brokerage rather than exchange, which means they offer crypto commission-free crypto trading. Right? If you're thinking about a Coinbase, you have to pay like a 1% fee in order to transact on the platform. Voyager is one of the few, them and Robinhood, that are actually allowing commission-free crypto trading. The way that Voyager makes money is that if they fill your order better than they quoted it for you, they share in that savings. So if they quote you Bitcoin at 30,000, they fill it for 29,000. There's $1,000 of savings. You guys split that money. The reason why I think this one is interesting is that it's gotten hit with all the other Bitcoin stocks. Like I'm thinking about the Bitcoin miners in particular, like your Riots and your Maras. But the thing that's beautiful about Voyager is that they make money on both sides. As long as there's as there's transactions that are happening, users are trading, they're making money. It's not like they're dependent on the price of Bitcoin to increase. They also offer 60 altcoins on their platform. So let's say Bitcoin falls out of favor, but then we see Dogecoin start going crazy again. They benefit from that transaction as well. Do I think that user growth, new users entering the crypto market and joining the platform will slow down? Yes. But the stock price and the estimates have gotten washed out as Bitcoin's dropped off. I know from our readership on Benzinga.com, there is still a massive amount of people who care about crypto, are reading about crypto, involved with crypto and altcoins every single day, even though the price is way off of its highs. And so for that reason, I'm trying to pick a bottom in Voyager. I said this is the more speculative one, the high risk, high reward type play. But Voyager Digital, that is the next one I'm throwing out there.
I wish I had an air horn. If the people unfamiliar,
there we go. See,
cool. Why do you do the air horn for? Why do you do the air horn for on Power Hour? Why do you do that for?
Boom. The air horn just lights it up. There nothing drives energy like the air horn. All right.
So the reason why I'm saying that is because my audience is very familiar with this company. So we were very, very fortunate. We recommended it down here at below $1, and we still have it in the portfolio. So we also had it up here and participated in the move down, but we're still up a lot. But very familiar with this company and what they're doing, and just amazing. I didn't know that they would split in the difference if they get a better price in brokerage and stuff. And but these guys are right in the middle of it. They're 100% pure play on crypto, right? Just like the Galaxy Digitals and the Marathons and the Riots. So if you're a real believer that. And I think you'd agree with this, right? If Bitcoin's going to 100,000, which we hear all the time, and it doesn't have to happen this year, it could happen 2-3 years. I mean, this company, Marathon, Riot, Galaxy, these things.
But the reason why I like this one, though, is that
yeah,
they make it on both sides. versus like Amara. Amara owns Bitcoin. Your price is pegged to whatever the price of Bitcoin is. Whereas this one, I like that the revenue stream is a little bit more diversified. Of course, Bitcoin goes up. It's good for the whole space.
You're right. I think Mara and also Rye just got a little lucky with the China closure, though, because now that they're not the only game in town, but everyone's struggling. Those guys are locked in, hash rate's down. So it is interesting to see how. I love the crypto industry and how much it changes.
Have you looked at CleanSpark?
It's really cool. No, I haven't looked at CleanSpark. See, you got to make me write a name down. I love it.
All right.
Why? What do you know about it?
Check out CLSK. Not in it. Potentially going to be those three that I just talked about. I'm in all three of those. But CleanSpark one potentially getting into in the near term. So the background of the company is that they do microgrids. It's basically it's a SaaS play for small solar energy setups, right? So if you have solar panels at your house, they're running all the SaaS software to optimize energy collection, storage, repurposing back to the main energy grid, etc. That's like their core and their legacy business. They have military contracts to operate these microgrids at military bases. They've moved residential as well and are getting more residential uses. But basically to showcase that they're really, really efficient with energy, they bought Bitcoin miners. And because they create all the energy themselves and maintain all the energy infrastructure themselves, because that's their core business is software plus the hardware for these microgrid systems, they're mining Bitcoin at less than $6,000 per coin. And they don't get a ton of a premium for that at all. They get almost no credit for the revenue of their core business, which has been around for many years and existed as a public company for many years. And then so you got the stock trading at $550 million market cap, and then cash and cash equivalents are something like 300 million. So it's a cheap stock, and I think an interesting way to get some of that crypto mining exposure.
No, I love it. New idea. I also love the 52-week range, 260 to 42. That's awesome. So it's trading at around 16 right now. But so listen, love the picks, love the ideas. Your audience, any audience, they love those ideas. I love talking about your background, learning more about you, man. I think you're doing a fantastic job. I'm looking forward to Power Hour and being on there tomorrow and every Thursday for the next few weeks. If someone wants to get in touch with you, learn more about you and whatever, if it's through social media or at Benzinga, how can they do that?
Yeah, Twitter, super easy. Luke Jacobi is my handle, Jacobi on Twitter. Reach out, say hi. If you ever have ideas of things we should be doing at Benzinga, things we should be doing better, articles that you think suck, whatever it is, tell me. We've been building this company for 9 years. Like we started this segment. We want to be the best out there. So always looking for ways to improve our business.
Nah, that's awesome stuff. Well, listen, thanks for coming on. Keep kicking ass, man. And I'll see you tomorrow on Power Hour. So I'm glad I was pretty nice. So you got to be nice to me tomorrow. So it should be pretty cool.
You're pretty nice. And don't worry, I'll have the air horn ready. We'll be smashing that air horn.
I'll have some good ideas for you, man. So listen, thanks so much for coming on. And I'll talk to you soon.
Awesome. Thank you, Frank. Talk soon.
All right, guys. Great stuff from Luke. I mean, you can watch him host Power Hour every Thursday or every day, actually, at 12, but Thursday especially because that's when I'm on the show. Talking my favorite ideas, and I'm going to be on there over the next 8 weeks. So doing some partnerships with those guys. They're growing tremendously. They're doing fantastic. So be sure to give it a watch. And when I'm on, they have chat box. Feel free to answer questions, make fun of me, say anything you want, ask me anything you want. But thanks for coming on, sharing those ideas. I say this all the time. This podcast is about you, not about me. Let me know what you thought of that interview at frank@CurzioResearch.com. That's frank@CurzioResearch.com. Now let's bring in the one and only Daniel Creech. What's going on, man?
Frank, what's happening?
So we like talking about recent news for the week. And last week was a little, it's all right. This week, holy cow.
Yeah.
I mean, we can start off with a lot of different things. Just what we do here, guys, is, not just the topics that are important, but we get a lot of questions, through you, right? Because your email, frank@CurzioResearch.com. And these are topics that we want to cover. So, email us in if you want us to cover things. Like email Monday, Tuesday, and say, hey, could you cover this on a podcast or whatever? Because a lot of these stories, there might be a lot. There was a lot of stories, big stories out there. And I want to start with Didi, right? With China. I mean, holy cow.
Uber,
what happened there?
Uber of China, you know. Well, there's always a lot under the surface. And so it did an initial public offering, Frank, just a couple days ago, surged. I think it was priced at $12 to $13, $14. It went over 16 at one time. And then what we always hype about and piss a lot of people off with, but why you have to pay attention to regulation and politics, right? Because China, those power enforcers over there, just literally pulled the plug. And this goes back, remember, I think last week we talked a little bit about Buffett and Munger and their Building Wealth or special on CNBC. And Munger was praising some of China's government and how quickly they get things done. Mm-hmm. So when they say jump, people say how high. When they say stop, stuff comes to a screeching halt. There's no slowing down. There's no speed limit detours in China. You don't go from 65 to 45 to 30. You go from 65 to 0. And so what happened was, basically their app store over in China said, hey, you have to take the Didi hail service, ride servicing app off your platform. And it caused shares to plunge. And Frank, when shares plunge like that initially after the IPO, who gets hurt the worst?
Oh, of course, it's the retail investors. That's what it's all about. That's what everything's about, right? The whole market is based on, I'll say it, fucking the retail investor. And, they do that as much as they can. That's what IPOs are. And especially now in the format and stuff like that, you can be going on that, but just they come out crazy valuation. We'll talk about that because the Robinhood IPO, right?
Yep.
We saw that. I love looking at these S1s. That's where you can really break it down, the company. A few people look at them and just figure that out. But anyway, let's stay on Didi here because, we're seeing that, and I brought up the chart, which was funny.
Well, it surged. And the big thing here for me is like, you could easily play Monday morning quarterback and say, hey, you should have seen this coming. You can never count for China to tell the truth. A lot of foreign governments, a lot of governments in general, are not so straightforward with people. It's easy to take that route, but this is a new data point that investors need to pay attention to. You really need to look at geopolitics and see where capital is going to flow. So you noticed, Frank, yesterday, China-related stocks, JD.com, Tencent, which is they own WeChat, which is, how would you describe WeChat over in China, Frank? Like the biggest and best instant messenger that everybody uses?
Yeah, where they track everything and provide, everything. Yeah, so basically WeChat's huge, yeah.
And all those shares sold Alibaba, Jack Ma. Oh, where is Jack Ma, Frank?
Today, I don't know where he's been. I mean, he did finally come out.
He did.
But he got,
basically said he's doing well.
Yeah, they say
his diet's working. He's losing weight and getting healthy.
Everything's well. But I don't know if you could really prepare for something like this. I mean, when we have the chart, the stock came out 14 a couple days ago on 30th, I believe it was, and then went up to 17 or 1650 about, and now it's all the way down to 11. But, Dave, how do you prepare for something like that when it doesn't seem like, but China obviously timed this, so they would screw them the most, right? So it's hey, you could have did this before, and that's okay. And it makes you think that ByteDance, which may
your
be
favorite platform.
TikTok's the greatest thing ever. Holy cow. Don't go on TikTok. It's so great. I love TikTok. Oh, my God. TikTok is so... You just be laughing hysterically.
See, look, all I had to do, get you going. Look at that.
Don't get me going on TikTok. Holy cow, is that addicting, and it's just really, really cool. It just, you're going to watch amazing, amazing videos tailored right to your needs. Anyway, ByteDance is going to be the biggest social media platform in the world. Everybody is copying them and their format because it's so amazing. But a lot of that has to do with collecting data, which is why, the Trump administration came out and said, and whether you agree or not, I don't want to get political here, but, they're collecting data. China's collecting data. But apparently with Didi, I guess they're not collecting. I don't know. I mean, you think like all of China, the government's collecting data, but if that was the case, then they wouldn't be coming out and basically,
Well, the reason or justification is for consumer protection and cybersecurity threats and all that kind of stuff. So that's what the government over there is saying. Hey, this is potentially harmful to individuals and their data, so we're going to look out for you guys and protect all this. What's ironic about that is evidently you don't care about the people's data they already have, because when you take the app off, existing users of the Didi app were still okay to use it, but you weren't allowed to have new users. Well, what does that do for a growth company and trying to get new revenue and new customers? To your point, who owns TikTok, Frank? What was it?
ByteDance.
ByteDance. They're looking to IPO. Did you see the valuation that they're talking about for private?
It's got to be, what is it, 100 billion plus?
No. Yeah, plus.
What is it?
So, first of all, I'll tease you with that for a minute. Instead of listing over here, they're looking at either listing in China or Hong Kong. Okay? So you have geopolitical powers competing for private capital or public capital in markets and economies. That's a big thing. We'll go down that road another time. $400 to $500 billion.
I was going to say, if that thing came out, I was really just going to say, Daniel, if that thing came out at a $300 billion valuation or lower, I would make that the largest position in my portfolio, because that thing is going to be $1 trillion. If you see what Facebook is, ByteDance is, that's the future of social media. That's the video platform. Everybody's copying it, but holy cow, it's just and people are on it for a real long time. It's just man. And when they're going to start generating a fortune through it.
Well, that kind of valuation, you talk about crazy, and hey, good for them. CNBC had a report where they were willing to accept a lower valuation, and they know they were going to get a lower valuation by listing somewhere else other than the United States, but they're okay with that. Why? Well, if you ask a simple-minded guy like me, it's because you want to walk the line on China and not have these regulatory crackdowns just like Didi. The worst thing in the world is go public. How many lawsuits are they they're facing? At least 2 here in the U.S. I mean, the low-hanging fruit, Frank, if you're a lawyer, I'm not a lawyer, you're misleading in your disclosures. You didn't tell us that this was a risk. Now it's come out that China actually warned them not to go public and all that. You talk about just an absolute mess. And again, if you bought this stock anywhere after its IPO, and you're TV, down big, and now emotions are playing.
Over TV, right? People talking about on TV, right? Which, you talked about earlier. I kind
of sidestepped your earlier question. How do you play this? Well, you either avoid it completely or you trade it, in my opinion. After it getting smacked, I think it was down almost another 10% today because it got pulled off basically the App Store version of China. Now it got pulled off of the WeChat and Alibaba.
Yeah.
So it was down a little bit before we came on the air today. I don't know what it's doing right now. But as a trade, why wouldn't this thing spike, either trade it or stay away from it is my
How would it spike, though?
Cents.
You see a company that when they get removed from these app stores, you're done. There's no place to download it now, right?
Right. But if you do certain things right over there and you get on the good side of China, they're one headline away from saying, we'll put this under review. Maybe we'll let them.
But you know what, Daniel? Getting on the right side of China seems like, right? Because they were saying that, they want to protect personal information, which is a joke to me. China saying protect anything, but protect personal information. So they want to collect that data. This way they could throw AI on it and study patterns. And again, that's great for advertising dollars. So basically you're ruining their model of generating profits in social media. So even if they change that, that's kind of scary. And I know there's people, listen, you really couldn't see it coming, no matter who you are. It happened. Maybe you'll see, 1 or 2 guys say, "Oh, it's right here, buried in a 500-page thing," where whatever. But it's hard to predict. And then you have, I know Jim Cramer was touting this, right? Which you said, which and I think he's pretty pissed off now, right?
Yeah, absolutely. I mean, you could tell. I happened to catch a little bit of CNBC this morning when they were talking about it with the new app getting taken off of WeChat and Alibaba. He was actually calling on the SEC commissioner, is it Gensler? I don't have it in front of me, something like that, about, hey, why aren't you making an announcement of saying, hey, we're going to look into this, we're going to talk to Goldman Sachs, Morgan Stanley, I forget the third lead underwriter in that group, which just plays into our thesis for Curzio Research Advisors, invest in the most crooked people in Wall Street, because Goldman Sachs,
they made their fees.
Let's say they end up paying fees. They're probably a third of whatever they made.
They're in this stock a lot lower, believe me. They made their fees. They're fine.
But, Cramer seeing that and saying, hey, the SEC should be after this. But what are you going to do? You're going to go over to China and tell them you're basically just going to segregate markets. Capital is going to have to decide where they want to list, where they're treated best. Ultimately, it will flow there. That's got to be bullish in the U.S. for the longer term. But you're going to miss out on some huge opportunities in growth stocks. But again, if the regulatory environment is so thick hanging over, why would you want to play that game?
Yeah. And one thing I will say about Cramer, because I know he was really pissed off, a lot of people, have their strong opinions on Cramer, but I would say from someone that worked for him, when he gets something wrong, you don't want to be around him. He's really pissed. And he's pissed because he understands the responsibility that he has, that so many people are listening to him. He'll take it out on a lot of employees, including us, the research analysts. But I kind of always liked that and respected that, because some people, just say, hey, this is going up, this is going down. They really don't care. Just that emotion shows that they care, and we're all going to get it wrong from time to time. So I'll defend him a little bit there, but no, I hear you. But this brings us to, I don't know if I want to talk about a bigger point here when it comes to China, but I mean, China is becoming more powerful than the United States, like right in front of our eyes. I mean, you see it on the political world where, everybody's on the take in China. I mean, you just look at the trail. It's so freaking easy. It's unbelievable, right? It's just why they're opening up. That's really what I think doomed Trump when he really started going after China and everything, because you're cutting off that money supply to so many people. But I mean, just the fact, ban this, ban that, and getting stronger and stronger. It's kind of crazy. It's just, how much news out of China, even with Bitcoin and mining and stuff like that. And by the way, crypto intelligence is coming out later today, and I recommended a stock based on that. That's going to be a huge beneficiary, but really, really good issue coming out, video issue for you crypto intelligence subscribers. But yeah, when I see this with China and how much power, it's just, and how it's getting greater and greater and greater, and just, look, it's the Hong Kong thing, Taiwan. It's just, I don't know, man. I don't know how that's going to, I don't know. I'm just, that's a risk down the line later on. But man, it could get hostile. I think it might get hostile, but it's pretty crazy out there.
Oh, yeah, absolutely.
It really is when you look at it under the hood. I mean, it's not political, not anything. It's political in what they're doing, how they know they could just bribe our politicians and get whatever they want, make sure they get access to every organization, everything. But it's kind of crazy. And again, I'm talking about China's government. I've been to China. I love people in China. It's beautiful. I think it's great. But yeah, it's just, that's a little scary,
Yeah, absolutely. I mean, definitely it's going to cause volatility in the markets. There is risk for greater conflict in reality, but absolutely in the markets. So just be prepared for that, brace for that, and just know but pay attention, because it's good. The crackdown in crypto continues. They're cracking down on companies that help process transactions and different things. But crypto is doing what? It's holding 35. It's kind of marching back, bouncing around between 30 and 35,000.
See gold?
Yep. Now, I mentioned that this morning to you, and I was like, man, gold popped, I think, $20, $25 yesterday. It was up another 10 pre-market today. Don't know exactly what it is. 2 days aren't a big deal or a huge reversal, but it's something to pay attention to, because you talk about low-hanging fruit, that commodities and oil. We've talked about that a lot lately. But going forward, just pay attention to regulatory issues and just know that, hey, this is part of your investing world now. So know what ETFs you own, know what exposure you have. It's real enticing to invest in China because it's a huge growth market, but you have to remember the government can enforce rules overnight and they can change their mind just as quickly. So volatility, maybe look at it as a trading platform.
Yeah. And even going to into gold a little bit here too is, I mean, just one of the greatest environments in gold probably in the last 20 years. That's why I have a lot invested in gold. I don't know where it's going in the next couple of months or whatever, but I do know that inflation's coming. I know we're seeing the 10-year come down. People are saying, "Oh, it could be inflation." You're flooding the markets. Look at wages, wage growth. I mean, a lot of these numbers are getting crazy. Just look at the value of your home. But also, these guys are in perfect position, right? I mean, they're in a great position where supply is still limited. They can produce for under $1,000 an ounce. Where are we? Wherever 1,800, wherever we are today. These balance sheets have never been stronger. They're buying back stock. They pay dividends. And you talk about the producers here, and it's going to open up the door to, they need to find gold assets and projects. And that's going to open the door to junior miners with really good management teams and projects. But, it's a really good time to invest in gold. You're going to see the ups and downs. It's going to give you opportunity to buy things 10, 15% lower. But, if you have just a 2 to 4 year outlook, this is a great industry to invest in. And I haven't seen better conditions in the gold industry than what we're seeing right now, probably for 20 years.
You still with your price target of 2,000 by the end of the year?
I think we're going to hit 2,000 by the end of the year. Yeah, I really do. And
well, you're not far off, so that's pretty good.
I mean, no, actually, 2,000, but I think we could blow past that. I mean, I think we could be at 2,500. If we go past 2,000, I'm going to write 2,500.
I wish I could do my best auctioneer voice. We go 21, 22, 22.50.
Yeah,
23.
and look, if I'm wrong, I'm wrong. It's forecasting, and who knows if it's going to be December? Who knows if it's going to be 3 months after that? So don't play it through options and have that time value in that. But I do know that it is going higher. And it should go higher. And I think also the Bitcoin environment is amazing as well. I mean, just more and more news. Visa, did you see that news on Visa?
No.
1 billion. So their Bitcoin card has done $1 billion in transactions so far in the first half of the year.
Is that the rewards, or is that using Bitcoin
I think
for
it's
purchases?
a Bitcoin card. So
Okay.
I just read the headlines. Cool. I didn't get a chance to read the story. I just saw. I was like, holy shit! But it just shows you like the adoption of Bitcoin. It's just amazing. I mean, I told the story early in my crypto intelligence newsletter that you're here, and I'll say it again. But I was in St. Augustine, which is the oldest city in the United States, and we stayed at a DoubleTree, and the ATM machine, Bitcoin. You could pay for things Bitcoin, whatever, but it was Bitcoin available on the ATM machine, which I thought is amazing. I mean, that doesn't get more mainstream than that at the oldest city. But there's news coming out about Tether again, all this stuff about Tether and being risky and could be the black swan event. But again, we've been through this once before. They've gotten fined and they got a look under the hood of what's going on there. So, but you're seeing, Bitcoin, it remains strong along with gold. And I guess, talking about another topic here. One is, did you hear the rain just a minute ago?
Yeah. Oh, yeah.
Okay, so we're in Florida, and the hurricane's here. We're not really getting hit by a hurricane, guys.
Oh,
it's
a tropical storm now.
Yeah, it's a tropical storm. I mean,
I say that like I know the difference. I'm still new enough here.
I mean, you have to be careful because, like, within 3 days, I mean, it's projected to hit Miami head on and almost be a hurricane into Miami. And now Miami, I don't even know if they're getting any rain. That's how far west it moved. But it's barely going to hit Jacksonville. But, all the water's gone here. If you notice, Deo grabs the water sometimes, and he bought like 2 cases. And my wife,
I got lucky. Is the water gone from the grocery stores?
Yeah, they're gone. So I took a half a case to the house yesterday.
It's funny. Normally I buy one a week at least for the office, and the other one I bought 2. And I didn't even think about the storm. I was like, I'm lazy. I don't want to come back in a couple of days. I'm just going to get 2 now. Yeah. Sometimes you get lucky.
No, yeah, but that was cool. But yeah, I mean, a lot of times, I mean, it's so funny, right? Because, you have to sound crazy. I remember, I've been here for 11 years, and I'm probably jinxing the hell out of it for this year. But, we had 2 hurricanes that created a little bit of damage, a little bit of flooding, nothing major. But we are in a place where it's really almost very, very inland in north. If you look at that map and just look at Florida, and we're above Jacksonville. But if you just look at that, of how a hurricane has to almost come all the way into you, because, we're so far inland from the rest of Florida, it's very hard to hit this area. But, you would think that, houses get destroyed like every other year, right? Based on the news and stuff like that. And it's just, but I remember they had one guy in a canoe and all of a sudden you see him like paddling the canoe and somebody walks like in the water right by them.
Yeah.
While they're paddling. It's like, come on. But yeah, I love the news flow because all my friends call and say, you okay with the hurricane? I'm like, yeah, it's just, going to get a little bit of a rainstorm, a little bit of wind, but it's not too bad. But yeah, I do hear it. And that's funny. Now, I want to talk about the Robinhood IPO because a lot of stuff came out on it. They're doing a direct listing. So it's not a traditional IPO. They have Goldman Sachs, of course.
Oh, yeah.
Lead underwriter. I think they're a lead underwriting deal. And they have their S1, which means you got to say everything and all your risks and everything has to be in there. And there was a lot of everything's in there, right?
Oh, of course. Yeah. Well, there has to be. Speaking of regulation, they just paid a big $70 million fine. I think that was last week.
That was in there, $70 million fine. Yep. Which I don't know if that was for...
It was related to the GameStop and all that kind of fiasco.
But remember, with them GameStop, their excuse for halting was not SEC related or margin call requirements. It was, we're trying to protect the investor. Bullshit. Bullshit. I mean, come on. Yeah, that was great. They're going to be great for Wall Street with the IPO. They're perfectly set up for that. So good for them. But they also, the SEC, they've hired, they paid the former SEC head, Dale Gallagher, $30 million. As to work for their chief legal officer. Man.
Are you kidding? I didn't see that.
I mean, I just interviewed Hester Pierce. Hester, what are you doing? Get out of the SEC.
No kidding.
These people are hiring and they want experience and they want people with contacts. I mean, that's what it is. When you're as an SEC commissioner, when that's up, holy cow. It's like an automatic like $5 million plus with a signing bonus of, probably 2-3 Teslas and 4 houses right now. But you're SC commissioner. And it makes sense, right? I mean, especially for Robinhood, which is, needed to understand regulation a little bit better and position themselves right and understand what was coming at them if they were wrong in the fine they had to pay. But that's a very, very big fine, guys.
Yeah, it's a huge fine. But hey, you know what? That's the game. That's the way it's played. I mean, fines aren't that big of a deal for these massive corporations. It's sad, but that's the way it is. What's got my attention here for this Robinhood thing is, so Robinhood took off like crazy because it was allowing the retail investors to trade for free, which there's nothing free. It's all back end for front running. So it's not free there. But their user growth was exploding. And according to CNBC here, from March 2020 to March, or I don't know if it goes through March of this year, but Robinhood has grown its funded accounts. They describe those as which have bank accounts linked to them to $18 million or 18 million customers as of March of this year. That's up from 7.2 million in March of 2020. So if you remember the timeline, Robinhood was blowing up because it allowed everybody, the little guy, to stick it to the big guy, call short squeezes, make lots of money. Then the fiasco with them halting trading and all that happened. So the account users is growing. They have the assets under custody are 80 billion. That's up from just under 20 billion last March. So that's a huge year over year. When this starts trading, Frank, who's buying this? Because I think this is a great gauge of your retail investor sentiment. If this thing gets bid up, did everybody just forget that they locked them out? And are they not upset anymore? Why are these accounts so these?
You asked the wrong question.
Oh, here we go.
Who's buying it? I know who's selling it because they are coming out with a direct listing, and their employees and directors are going to be able to sell a portion of this on day one. No 3-month lockup, no 6-month lockup, maybe for some of the shares, but they have the ability to sell a lot of shares on day one, which is insane because you're promoting this whole entire company, all the metrics that you just mentioned. Again, they're going to be fantastic. More people will get involved in crypto, just like Coinbase. And now you're going to, guys, you have to realize something as a retail investor. Okay, this is why I started this company. And please tune in on Friday for our CEO. We're going to do an AGM, so our annual general meeting. We're going to go over 2020 financials and everything. It's at 11:30. You can register. If you're on an email list, you got an email already, or you can go to our website. Please register because I'm going to talk about this. It's why I created Curzio Research, is because, in so many different industries, Wall Street, even financial newsletters, it's the retail investor that gets screwed, right? And that's the whole point of everything. Everything works as long as a retail investor is there, right? So you want to create all this stuff and build up, and they make, these guys who are selling these IPOs and the way they're structured now, Daniel, it's all about coming out in multi-billion-dollar valuations, doing the road show. They have, series A, B, C, D, E, F, G, freaking, capital raises. The guys who invest early have the ability to invest at discounts in the next capital raise. So these guys are building up their positions at incredibly cheap prices to where this thing IPOs. And then they come out when things are great. They do the road show. They talk about the best statistics. And then they sell this to the retail investor. And the retail investor is people who use Robinhood who, most of the time don't know better. They're like, oh, Robinhood's the greatest thing in the world. Okay, but Snickers is the greatest candy bar in the world, but I'm not going to pay $150 for a Snickers bar. So
Snickers is good.
It is good. I might pay like $20. I don't know. Maybe depends how I'm craving that. But you get the point, right? It's the retail. It's just like SPACs. Like all these guys are getting in. They're doing pipes. Everyone's making a fortune from $1, $2, $3, $4, $5, $6. You're getting a chance to buy it at $11 when they finally announce who they're buying, and that valuation's inflated. And now you're seeing SPACs not work as much. Only really good SPACs are working right now. Good companies, good management teams. But everyone was creating a SPAC because it was easy money. It was a layup to generate 30, 40, 50 million in your pocket if you started this thing, and you're out of that investment, which is what venture capital is all about, right? They're not long-term holders. No, they get in, they get out. And just like Peter Thiel got out, and he's great. And again, he got out of Facebook, and that stake would, I think, for $2 billion after the $500,000 investment, it probably worth 20, 30 billion, whatever it is. But that's his job, is to get out of these things, have liquidity, and go into the next one, right? That's what their job is. So they're not long-term holders. So all these investors and they're just selling you a story coming out at multi-billion-dollar valuations. You don't get to participate in the growth. And this is why the security token industry is starting to take off. The news has been fantastic the past couple of months because it gives companies the ability to raise money without going through the investment bank bullshit, right? With all the fees and everything. And it's great for investors because, one, you have a quicker liquidity period. You don't have to wait for private companies 7 to 10 years on average. But for the customer, you're able to invest in companies like ours during the super early stages of growth. And listen, we're a small cap company. Most small caps don't make it, or fail to grow or go into mid caps. There's tons of risk there. But if we do things right and we create $1 billion company, it's going to be incredibly life-changing for you. And you know what? If you buy Robinhood after the IPO, it's not going to be incredibly life-changing to you. What is it going to go up? 100%, 200% if everything works out perfect. but you're already coming into a valuation that's insanely high. And they're selling this, and that's what pisses me off. I mean, you see this in the financial news industry, you see it in Wall Street, where, you got to level the playing field. I mean, there's a reckoning coming, and you're seeing it with WallStreetBets, Daniel. You're seeing it with, throughout, having a voice and them saying, hey, you know what? We want to be part of this. We want to make money. We want to be able to control things just like freaking Wall Street controls everything. But, the whole Robinhood IPO, man, it's all bullshit. It's really
So you're not buying
bullshit.
It on day one?
I'm going to buy it.
You're going to buy it?
No, I'm not going to buy it. I won't buy it. I mean, I won't buy it because,
well, to your point of what you just
the
said,
employees and directors are selling in your face on day one. Why would they be selling if they, those guys know more about the company? Yes, they're in early and they're taking some off the table. They're looking to sell their stock on day one. I mean, that's an indication of, just like whatever. If it's Coinbase, again, Coinbase had a great valuation now, but would it go up to 400? And we're able to pick it up in one of our newsletters, Crypto Intelligence, for
they just got upgraded today. The price target only jumped $10, but I think Oppenheimer bumped their target price from 434 to 444.
The numbers are going to be amazing for the current quarter. I mean, they're going to be fantastic. I mean, the guidance, they may come out a little conservative, but holy cow. I mean, just because Bitcoin came down, it's the volatility, guys, the liquidity, massive. People buying and selling, they're generating those fees, and they're doing fantastic right now. But anyway.
The last thing on Robinhood there, just to your point, that's what has my attention, because Robinhood was used as these meme stocks and to get these things off the ground to the moon and all that, as they joke on the forums and Reddits and all that, chat places. What if the retailers go short one time? What if they band together and try to short Robinhood because they screwed over, quote unquote, the little guy? What if Dave Portnoy jumps onto this? So I can't wait to see how it trades, just because I want to see what the retail investor does. If there's an appetite for it, if they bid it up, if this becomes another meme stock or just a platform, if users leave or continue to come, that's an interesting thing to me. If you want to play the space, Schwab is good. They just did a acquisition recently. And Interactive Brokers is a very well-run exchange company. So check out those fundamentals. But if you're looking to play in the space, I would look at those. Volume and users are the drivers there. But yeah, that might not be too informative on the Robinhood thing, but it's a wait and see for me. And I do think it's going to be a good sentiment reader.
Yeah, it doesn't fit the MO of the Wall Street Bet crowd. I mean, it's AMC, you left it for dead. It's GameStop, you left it for dead. It's Tesla, all the criticism. We hate you. We're never going to succeed. And right in Elon Musk's face. I mean, with this, there is so much optimism on this coming out at a high valuation. It's like, I feel like the other stocks that Wall Street Bets, take those positions in, and, they get their whole group. I think it's over 10 million strong now. It is over 10 million strong now, as of, I think, July 1st, members to that group on Reddit. But, that group is more like, hey, these guys are treating unfair, whatever. Robinhood's not being treated unfair. They're coming out with a monster valuation. Again, they have good metrics, but, the fact that they're structuring this like it's supposed to be a good thing, given some of this to their customers and Robinhood clients and stuff like that. And you have so many people selling on day one, guys. Day one. That doesn't happen in IPOs a lot. You could structure it. You could disclose whatever you want. You could say, hey, I'm going to rob you. I'm going to rob you right now, and I'm going to collect everything. And as long as you disclose it, it's okay in our industry. So, they're disclosing. Listen, we have a lot of people selling on day one. That's not really what I want to buy it. But again, don't listen to me. Just, maybe it goes a lot higher. I have no idea. But
it's a wait and see. So
yeah, it'll
be fun.
One last thing here that is, I thought, went under the radar, but, no deal with OPEC. Right? I mean, so, supply tighter, oil prices rose a little bit on this news. I don't know. What would you take on it?
Well, it's bullish for oil in a sense. So you have the ESG movement, environmental social governance. You have that headwind, and that's going to cause and call for lower drilling in the U.S. So that's a huge deal, because you could see production decline. Now, with prices elevated, you're going to have an incentive to keep doing that, and the argument and the push-pull and the tug-of-war behind what's healthy for the environment and what's not is going to continue on. If OPEC, so the UAE came out today, I believe it was today, and said they're either willing, I don't know if they said they're going to pump more, but they're willing or they need to pump more. if OPEC dissolves and it's a price war, that's going to be bearish for the price of oil, which would be good for consumers. But if you just start having everybody pump as much as they can to take advantage of high prices, you're going to flood the market, and then that could cause oil prices to drop. That'd be great. So again, it's a wait and see thing. I'm still bullish on it. I think they all come together. You have to wait and see what production comes out. It's always hard to take these guys at face value as well, because they can say they're cutting back, and then when they have to release production, or journalists do their job and dig into the details. But you notice oil has popped the last couple of days on the no news thing, or no agreement with OPEC, and then it's kind of sold off. So I still think it's bullish. I think they'll come together and basically continue the cartel. But if not, that'd be great in the short term for consumers. And I'm still bullish on energy names. Absolutely.
I mean, you're going to see prices go higher, and yes, the environment's ripe for that, especially with ESG. But I have to tell you something. There's a company called Reddit Petroleum. I'm very familiar with this because I recommended it in a previous newsletter and worked for another company. It did pretty well. And this is one of the companies I visited with Cactus Schroeder in the Permian Basin, because they had operations in over 100,000 acres, I believe, in two of the counties, Glasscock and Regan counties. And I really studied the Permian, where it wasn't all Permian, where drilling is low cost and is amazing. It was like 4 or 5 counties, 6 counties. Now it's expanded a little bit more. You got to drill a little bit deeper. But I really got a good understanding of this because I actually went there, right? Boots on the ground. Cool company. Almost went bankrupt when oil collapsed. Now, if you look over the past year, it's up 10x, right? So you have a company up 10x, and this is caught me by surprise. I don't know if it's a trend or not. 10x, and they announced that they're laying off 5% of their workers. I don't know what to make of that. It might be maybe it's not a big deal, but you have oil prices rising. Yes, maybe you're going to drill less, and depending on if you get the right members on the board and the ESG community. Again, they were able to get on Exxon's board, so they probably can get on any board and influence any of the shareholders. They're influencing the largest funds in the world, the $1 trillion funds, to vote for them. But laying off 5% of their workforce, that means you're expecting demand to come down. That means you're worried about costs at a time when it seems like you should still be pedal to the metal as prices have gone up. You already cut costs into this, Daniel, right? You cut costs tremendously, right? So a lot of these guys are just starting to ramp up. They're seeing margins explode again. They're starting to generate cash flow. And even if they cut drilling by 10, 15%, now they could drill almost anywhere they want and make money in shale areas. And just to see LPI, guys, keep an eye on that. If we see a couple more companies, to me, that's a signal that the oil industry might be topping here. And I know you disagree with that, but again, that's something that is not common. It's like spotting something that doesn't belong. And that doesn't make sense to me. And it might be a one-off, but a company that's doing fantastic, up 10x over the past year, I believe it is, just coming out with oil prices rising, just coming out and laying off 5% of his workforce. I want to see if that's a trend, if we see it elsewhere, because to me, I think that's a tell that maybe, these oil companies are worried about costs or worried about something. I just don't know why they would be cutting at a time when you should really be hiring and producing more, trying to produce more. So I don't know. I don't know what to make of it, but I think it's worth noting.
Yeah, absolutely. Yeah, I mean, like I said, it'll be, that's going to be volatile. I just think, I think the new average is going to be higher. So maybe it drops into the 60s. I just think that oil is going to be elevated from here going forward, just kind of like the inflation statistics. Once you start looking year over year, it's not moving too much, but it's going to be higher on average than it was in the past. That's going to be good for oil producers. And they're just like the gold companies. They are showing discipline so far. Their CapEx is under control. Their distributions are under control. Royal Dutch Shell just announced this morning they're increasing distributions starting in the second quarter by 20 to 30%, I believe. So it's going to be a stock picker's market, which is going to be good for us. So
are you saying
I just think higher prices are going to average out.
Is that what you're saying? You're saying we're good stock pickers?
No, I said that's good for us. We got to prove to be good stock pickers. What do you want as an analyst? Well, we need
no pressure, but that's great for us.
We need companies to start trading on their own, not just all with the tide coming in and out. So yeah.
Yeah. So I wanted to talk about one last thing here because I like to provide ideas and stuff. And what I notice is like the 52-week high list. A lot of companies making this list, and not a lot of companies, but you've seen like technology companies get back into that list. The Facebooks and Nvidias and stuff like that. And that was over the past couple of days. But there's one stock that it just amazes me. It's Target. And Target seems to be on this list every single week. Every single week they're on this list. And yeah, if you look at their chart, it's up like 100% over the past 12 months. But we're looking at 12 months from now when COVID was really, companies were still kind of like, some companies bottomed around now a year ago. But you're seeing, a nice, steady, slow move higher. It's not like 15% gains in a week and then coming down. And then, a month later, it's just, if you look at that chart, it's kind of amazing. But Target is one of our holdings in Curzio Research Advisory. We really nailed that one. The only thing we didn't nail is we wanted to take a bigger position, but the thing started taking off on us when we recommended it. And then, because we almost bottom ticked it. And just to see that company continue to hit new highs and what they're doing. And UBS actually, a couple days ago, upgraded them to buy from neutral. Interesting. So up 100%, surging, new all-time highs, and now, now you're upgrading to buy. Not saying that that's bad or good or whatever. It's just, you could say they're late to the party. But again, it's Target go a lot higher from here. UBS could be right from where the stock's trading today. But that's just another thing I wanted to know, just ideas that I'm seeing, but just quietly, right? Daniel, where slow, boring, could make you a lot of money.
Oh, absolutely.
And, everyone's the GameStops and option market and just tracking the option activity and trying to jump aboard. What's going there with the Nigerians who I like those guys on CNBC, and I've interviewed one of them, I think John Nigerian, on my podcast before a couple of years ago. But the GameStops and all this crazy stuff and these quick gains but listen, it's investing. You're investing in this company. You could have sat on it. Nobody's going to tell you that Target's at an all-time high right now. Nobody even knows. And that's a great stock on a risk-adjusted basis. You're buying one of the largest retailers, growing retail, got it right. And if you own that, good for you. And I'm hoping a lot of our subscribers own it. But it's not always like those quick profits in a week. 100 gains in a year. Holy cow!
Yeah, absolutely.
I mean that's pretty incredible. And
and you're in a great business, and that's the definition of investing. I mean, you buy, you monitor it, make sure your thesis is still intact. Management and management is number one, executing, and customers are voting with their wallets and their feet. I mean, it's great. So, I mean, big and boring is good. Insurance companies are the same way. Banks can be the same way. They get in the headlines a little bit more, the banks. But that's wonderful. So hopefully a lot of people own it. And more to come.
So, all right, Dan. So covered a lot today. Thanks for stopping by. We always like to cover those subjects. Serious, guys. Email us, frank@curzioresearch.com. Daniel@curzioresearch.com, and let us know. Like on Monday or Tuesday before we do this, we tape this on Wednesday, and then it goes out Wednesday a couple of hours from now after everything's produced and perfectly formatted. But let us know if you want to cover a lot of things, because chances are we're covering it. We both cover all the markets and everything, so it's really cool. But Dan, thanks for coming on board. Appreciate it.
Yeah, absolutely. Cheers.
All right, man. So real quick, I'm going to mention this again. This is exciting because, man, Daniel was talking about different things of, hey, did you see this? Did you see that? I didn't really see too much. I did publish our crypto intelligence, or, I have that old tape, and that's coming out later today. But I've really been working very, very hard on our presentation for our company, right? For our CEO token, a company, what it's based on, how you could have a public own equity stake in our company. And that meeting is going to be July 9th, and that's this Friday at 11:30. I think it's open to 250, the first 250 investors, or people who sign up for it through Zoom. And that's our annual shareholder meeting. We're going to update on your 2020 financials. And you're saying 2020 is a while ago. We usually would do this around May, but we did get our financials audited, which really separates ourselves from everyone in the industry. Anyone that you have a small business and you're getting your financials audited for the first time, holy cow, you're going to be put through the ringer. Every number and everything. It's the greatest thing now because you're forced to know every single detail to the penny of everything that's going on. But it took a couple of months longer than expected. And now we're going to talk about 2020. We're going to talk about first quarter, and also just break down those financials. You get to see them. They're going to be on our website at CurzioEquityOwners.com and our IR page. And most important, we're going to talk about the growth initiatives and explain why the position we're in and how fortunate we are to really grow this company right now is very, very exciting times. I'm going to break down those numbers for you and tell you why, because we're focusing on two different industries now. It's financial publishing and media, and also security tokens, which is seeing a massive, massive boom, especially over the past few months. Something that's got me very excited, to the point where the largest platforms, trading platforms, are reaching out to us because they want us to trade on them. which means we're a US-based company. We want to trade on a US-based platform. And now we have the biggest guys in the industry reaching out to us. And there's a reason why everyone's reaching out to us. It's our token structure is good. We have a good brand. We have good people, good subscribers. And it's really, really exciting times for us right now. So that's one of the things that escaped us is liquidity for the token. Now, if we do trade on a U.S. exchange, that is going to increase liquidity tremendously. But, you know, if it happens, it happens. But we are in talks with them. And you know, it's really, really cool how everybody is coming to us right now. And that's exciting time. So if you want to get updates perfectly free, we're not selling anything. It just, you know, it gives you an opportunity. You could buy our stock on the Merge Exchange if you want. CEO is a symbol. Again, do your research on it and find and everything, your diligence. But we're going to talk about all this stuff. Me personally, with slides going through, it's going to be really cool. And that's Friday, July 9th, 11:30 a.m. So be sure to register because it's only open for the first 250 investors. And then we're going to have, you know, a replay and a tape and stuff like that. That'll be available for anyone else who wants to go there. But I just wanted to pass that news along. So guys, thanks so much. Listen to the podcast, supporting us. Like I said, exciting times are going to go over on Friday with the company and what we're doing and you know, building this brand and, you know, just always putting our customers first. And it's really, really great times. Really, really great times. So I just appreciate all the support. Questions, comments, frankcurzioresearch.com. And thanks so much for listening. And as always, I'll see you guys in 7 days. Take care.